It's a beautiful day in Trussville, Alabama, and I'm standing in front of a new environment we've never shot here before. This is the law offices of Massey Stotzer Nichols in Trussville, Alabama, and this is a introduction to a two-part series, a continuation of our community conversations about inflation and interest rates and how they're impacting different industries, different people, consumer and business. And we're about to have a conversation with Scott Stearns with MortgageBanc. Very excited to hear from him and his expertise when it comes to interest rates and buying a house or buying property. Check it out, and if we can be of help, let us know. Ian Maddox, HMFP. Hello everybody, Ian Maddox, Hitchcock Maddox Financial Partners. This is a continuation of our community series on inflation with different community subject matter experts, and I am joined today with Scott Stearns from MortgageBanc. I think there's some nuance there, the way you guys operate nationally, so tell us that story a little bit, Scott.
Yeah, Ian, thank you for having me. And we are MortgageBanc, known in the local market, been branded MortgageBanc for 20 plus years. But we joined forces nationally with Fairway Independent Mortgage a little over 10, maybe 12 years ago. So all of our funding is direct from Fannie Mae, Freddie Mac, FHA, VA. We love serving our veterans, USDA. So we fund everything direct. There's no broker or middleman.
Sure.
Yeah.
So if it comes to mortgage, essentially you guys can do it. Your team, either you directly or someone in your network, can handle it anywhere
Right.
in the United States. Now you're
Yep.
local, right?
Right.
You're Birmingham market or Central Alabama, right?
We can be individually licensed per state, and then Fairway is in all 50 states nationally.
Yeah. Well, this is awesome. We've tried to, in the last handful of weeks, bring in experts to talk about inflation and how it's impacting consumer behavior, decisions, business decisions, et cetera. So I wanted to loop Scott in. Thought about bringing a real estate agent in, but he can kind of touch on both sides because that's your bread and butter is real estate agents. And so you may have a relationship with someone, they come directly to you because they want to refinance, but in many cases you have a broad network of real estate agents in this area that loop you in as they're trying to get deals done, right? As people are seeking different scenarios with their home needs. Is that about, a good way to sum it up?
You're exactly right, and we understand our place. It's fun to search for a home. It's not so much fun to search for a loan. But you need the loan to get the home.
That's exactly right.
So the public, a lot of times, especially now in the modern age, they're on a laptop or a tablet and they're searching for homes, not necessarily running numbers on mortgages. So most of the time, 95% of the time, the public meets the real estate agent first. Right. And then the real estate agent says,
kind of the tip of the spear in the process, right?
That's right. That's right. And we understand that. It's more fun to look at the house, and then the real estate agent finds out if they're qualified or not, or they refer them over to us, and then that's when we start working with the public. Besides repeat clients that have been with us over the years.
Sure.
So yeah, it's really a neat process. And when I meet a realtor for the first time, I call and introduce myself, and I say, hey, I know we don't know each other, but now we are business partners for the next 30 or 40 days for this family that we're serving. So I want you to know who I am and my contact info and whatnot. Yeah.
That makes sense. Well, so that brings us to the subject at hand, which is inflation, which has been a big deal, and interest rates, right? Because those things have kind of been lockstep for the last 2 years. We've had a lot of evolution there.
That's right.
Things have improved and they've changed. So what I'm interested in for our viewers that are watching this, when I think about folks that are interested in financial planning and their decisions, obviously their home comes into that. We're also going to talk about in a second reverse mortgages, because that's something that can be applicable to someone in their retirement years that needs to bolster or supplement their retirement income. So what are you seeing like now? Like 2 years ago, things were a certain way. A year ago, they were a certain way. What's happening now? Like kind of what, we have a different administration coming in. Right. What are you seeing? Like, how's the market evolving in terms of how people are behaving? What requirements are? Like, what are the challenges and what are the opportunities right now?
Right. Great lead in, because it has run the spectrum over the last few years, and people still call and they say, "I'm holding out. I want to wait till the rate gets back down to 4% or 3%." And as you know, when the rates were that low, the government was in a buying plan called quantitative easing.
That's right.
And
they've done it before.
It's to control the market and to really to stimulate the economy this last time coming out of COVID. And it was gangbusters.
They want to make money available.
That's right. The money was available, and if the interest rates are lower, the monthly payments of houses are lower, and people can build wealth through home ownership. So we really, as a government, we stayed in that quantitative easing plan a little too long, and then when they stopped buying the mortgage-backed securities, which that works like a scale. If mortgage-backed securities are performing well and treasuries, mortgage rates come down. But when they're not being invested in, it's the exact opposite. That's what's happening now. So when they came out of that quantitative easing program, the rates really leveled off again back about 6.5, which over a 60 or 70 year window is really a fantastic rate.
Sure.
But we've been spoiled.
Absolutely, and people don't have that perspective because most of the people that are coming to you weren't buying houses 50 years ago, right? Now,
exactly.
a few, but that's rare, right? You're dealing with people that have lived over the last primarily 20 or 30 decades, not 20, 30 decades, 20 or 30 years,
That's right.
20 or 30 years. And so they just have never seen an inflationary or an interest rate environment like this in their home buying years, their primary home. So this is all new territory for everybody.
It's new. You have parents and grandparents that lived during that time, and they're talking to their grandchildren that are now of buying age, and they're saying, "You don't understand. We bought a house at 18%,
right?
And we were thrilled to refinance down
late
to
70s, early 80s,
yeah, exactly.
Yeah.
But again,
it's a little bit different than not
well,
exactly the same.
In perspective, you could buy a home for $50,000 then as well. So, so it's all relative. But interestingly enough, we just had a presidential election, and we've not changed over the office yet. But the very next day, the stock market went on a run, and at the same time, mortgage rates went up, and people call. We love it because what the media is saying makes our phone ring. And when the phone rings, we can educate people on why that happened, not just what they heard or what they, I know this is going to be a revelation here, but you actually can't believe everything that you read off the internet.
Yeah, really?
or Facebook. So
this is what I love about our conversation that has happened over the years. But I appreciate you because you educate. Not everybody does that in your industry. Not every real estate agent educates. Sometimes it's about the transaction and making the next buck, and that's not necessarily helpful long term. You really want people that are helping people to get smarter about their decision-making processes.
Well,
and that's how we operate.
I
That's
love
what we
for
do.
them to understand it, and I work with a lot of first-time home buyers, step-up buyers, and retirement buyers. And a lot of times the first-time home buyer, they've never done it before. They're listening to their family, which are well-meaning, but they don't do this every day like we do. And then the retirement age client, they may not have done a transaction for 30 years.
Right. So it's all new to again. Basically, it's like the first time again.
So it's a re-education. I pay for 2 different publication subscriptions that come to my phone daily, and it helps me watch the real estate side of the market and the mortgage and stock market side of the market. So I can knowledge is power. If I have more knowledge, I can share that with the clients and help them understand why things are happening compared to what they thought should have happened. And sometimes it's the opposite of what we feel.
Right.
But the facts are the facts.
Data is
Our
data.
feelings change.
Oh, that's right.
Yeah.
We talk about that a lot, the concept of the heart, the mind, and the wallet when it comes to financial decisions.
That's
And so
right.
sometimes your heart, the emotion, can mislead you. So you have to be careful that you're balancing it with those other things. What can I actually afford? What's my financial position? And then what does the math tell me? What does the data tell me? So you got to loop all 3 of those together in your financial decisions.
No, you're exactly right. And buying a home, living in a home, selling a home that you raised your children in, and moving on
has a
that's
lot of heart.
an
A lot of heart.
A lot of heart, a lot of emotional decision. But then when we put the math to it, the math doesn't care.
Nope.
And the math doesn't lie.
It has no emotion.
It doesn't have emotions. So it tells us the truth in the middle of an emotional transaction,